Cloud. Good morning, Sense of Things. It's Jeff and Ron here, and the first week of January 2024. Cannot believe we've blown through a year so fast. Ron, how you doing, bud?
Happy New Year, Jeff. Doing well. I agree with you. I thought the year was going pretty quick up to Thanksgiving, and then December, just the blink of an eye. I guess it's just the holidays. It wasn't slow for me, but looking at 2024, going into 2023, I think we felt pretty confident about where things were going, even though things were going to be volatile. I got to tell you, 2024 is such an unknown. You better just roll the dice.
Yeah,
I think we'll end up higher. We'll talk about that in a minute, but I think it's going to be a hell of a windy road to get there.
I am right there with you. And I think I stated that when I sent my stuff to you last night, that I think we're all over the fence for quite a while. It's going to be a nutso year and a lot of reasons why. So I thought, why don't we start off at least the new year with some weird state laws that are on the books.
Oh God, we could do episodes on that.
So give me a second. Let me bring this sucker up here, because I thought this was a great way to get
a few months back. You had a couple of good ones.
We did that early in the show, actually, was doing some of these, but I figured that was a great way to start off. And we'll start off with your home state of Arizona. It is illegal, by the way, to hunt camels.
Come on, you didn't know that?
Yeah, so no camel hunting. I don't care if your neighbor has got one that's in their backyard and is baying, you cannot shoot the camel.
I am sure we had to import them, but I'll be honest, coming out here almost 24 years, I haven't seen any camels in Arizona.
Apparently, there's 3,000 camels in the United States. There are wild camels in Arizona. So just so you know, you are not allowed to shoot them. If you do, be very quiet. I am hunting camels.
I will tell you, I know that they do have parks for wild horses that just run around. Obviously, this is their environment, so they would definitely like it during the summer.
Wild camels, too, are all over the place. It is illegal to wear a fake mustache that causes laughter in Kansas.
Didn't they put that law into place after you left?
I think so. Yeah, it was during my Kansas porn days, in the early 80s. So yeah, you're no longer allowed to wear a mustache, and sorry, it was me. I caused it.
All right.
California, it is illegal to use a gasoline powered vacuum in your home. Just so that
I didn't even know there was such a thing.
California does not surprise me in their ability to come up with things that don't even exist. But what I'm wondering is, there won't be any more Jimmy Buffett concerts, but at Jimmy Buffett concerts, I wonder if it was okay to use a gasoline powered blender out there. So they may not be allowed to do that either.
I got to tell you, and if they did, they probably would tax you on it. So
I'm sure. Yeah, there's got to be some kind of tax on it. Connecticut, just to be sold as a legitimate pickle, the pickle must be able to bounce. Just so that there are like some kind of pickle police that go around and bounce pickles to make sure that they're a legal pickle.
What you should have done here, Jeff, is put in the repercussions. Is this a fine?
Yeah, if I have a soggy pickle,
is this a strip search? What's going on here?
Yeah, if I have a soggy pickle, what's the repercussions of it? Or is it just not a legitimate pickle?
Jeff, if you got a soggy pickle, this is a different conversation.
We got issues, yeah. Idaho, now apparently this was a big problem, but Idaho, it is against the law to be a cannibal. It's not acceptable, even if you had to do it during a life-threatening situation. So hopefully there will not be any rugby teams crashing into the mountains of Idaho, because they're going to be up a creek.
Or maybe they might get wild with their potatoes. Who knows?
That's true. They want you to eat potatoes, not people. Louisiana, it is not allowed to fight a bear, to wrestle a bear. It explains a lot why Davy Crockett didn't stop in Louisiana on his way to Texas. He was into the whole bear wrestling thing. So no Louisiana wrestling bears.
Okay.
Maryland, it is not allowed to wear sleeveless shirts in Baltimore parks. Now, we do know from watching Cops that the guy who's not wearing a shirt, period, is definitely the criminal, but
Right.
apparently even sleeveless shirts, you're the criminal.
So hold on a second. So this is just in Baltimore, but we can wear it in Salisbury, Maryland, or Bethesda?
Anywhere else, apparently you're good,
Not
but
not in
Baltimore park
Baltimore.
rules, you cannot have a sleeveless shirt, even if you're working out.
Okay. All right.
No wife beaters, no nothing on. You got to have a full sleeve shirt on.
I'll make sure I
Texas,
remember that when I go to Fells Point and
just so
here in the
you
harbor.
know, yeah, just you cannot walk around you can't even walk around the inner city or the harbor park without a sleeve or without sleeves on. So just so you
Fine.
know. Finally, in my home state of Texas, you can sell hair, you can sell blood, but you're not allowed to sell a human eye in the state of Texas.
Just in case you were looking for a transplant.
I exactly. I thought I've seen them on the side of the street on little stands, stuff like
Well, they
that.
were
But
keeping an eye out for you, Jeff. That's what it was.
absolutely, they definitely keep an eye out for you. So that's my take on it. We'll have some economic stuff later, but I thought just so that we understand the rules as we're going around the country this year, we make sure we have sleeves in Baltimore and we try not to eat people in Idaho. So
Unbelievable. All right, let's get into some serious stuff. I know I put out a market outlook report that's available for download, and I know we don't have time in a 15, 20-minute podcast to go through all the details. So I thought what would be good is to share our thoughts going in the next year, because there is carryover from this year
yep.
on some headwinds and some tailwinds. So I'll let you kind of start it off here with some of your headwinds going into 2024.
I think for me, being also owning several businesses, I think credit both for businesses and individuals is going to be a challenge. We've seen on the individual level credit go through the roof, and people are, it's okay, spend it now and the end is near, spend it all now. But the challenge is the credit card companies are not really as willing to update their credit standards or increase credit. I think people are starting to run to the end of the wire when it comes to that. Credit from a business perspective is getting harder, especially for really small businesses, micro businesses that utilize the regional banking system. I think there is credit out there for small to mid-sized businesses. That's an investment theme I have this year. We are investing a lot in credit. So a lot of business development corporations, other credit facilities for mid to small size companies, which I think that's an area of interesting growth. There's good dividends in it. And with rates potentially coming down, those things will still have pretty high rates on them. My other one is the presidential election. I think it's going to be crazy. And this one is going to be crazy times two. You've got one presidential candidate with 90 charges against him, the other one that's potentially in the middle of an impeachment proceeding. It's just absolutely craziness going on. And all the other candidates are just fighting for any kind of recognition at all.
We're becoming a banana republic.
Yes, very much so. And we used to laugh at this, but we're getting there. And then my final theme on the headwind side is, everybody has this belief that the Fed's going to cut interest rates. The big headwind is they could easily keep rates relatively high for this year. And I think if they do start lowering rates on a precipitous basis, something's really bad in the economy and you don't want to see it.
Yeah, I agree. Actually, you can see my first one there is about the high Fed interest rate. And the interesting thing about this is I know we laugh about it now, but last April, May, June, they were talking about a couple rate cuts in late 2023. And that was, I think, in place from the end of 22, thinking that there would definitely be a recession by the end of the year. Obviously, by mid-year, that wasn't going to happen. And then all of a sudden, and I read a couple of things last night that they're expecting potentially a rate cut as early as March.
Yeah.
And 2 to 3 for the year at a minimum, up to 6. If we have 3, forget about 6. If we have 3 rate cuts this year, and let's say there were 25 base point cuts, something happened. Whether it was minor, moderate, or major, something happened. The consumer slowed, higher unemployment rate, whatever it may be. I don't know. But going into that, mortgage rates are around 6 2/3, 6 3/4 right now. If they remain relatively high, relatively above 6% for the year, and the only way they're going to go down is if the Fed cuts at least 50 basis points for the year, will we see mortgage rates under 6%? So
Mm,
that means one of our headwinds is, new homes, people are buying it, they got money. But existing homes, just not going to happen.
yeah.
Now, the other thing is the business bankruptcies spiked about 3 months ago, 4 months ago. And I haven't gotten any new data on it, but the Fed's going to have high rates and people are spending like there's no tomorrow. The old YOLO life, right? You only live once. The personal bankruptcies have to go up. And the other interesting part of that, we're not going to get in every one of these, is just some of the honorable mentions. These are the usual suspects that we dealt with for most of last year talking about. So between the credit card balances over $1 trillion, we've talked about ad nauseum. The student loans being back in place as of October. I know you're going to talk about that in a little bit. Just those
Mm,
two things alone have got to push people to the brink that they've got to potentially file for personal bankruptcy. And the
yeah.
commercial real estate loans, I don't know if that's going to break this year, but apparently it's starting at the end of this year and will escalate into 2025, the
Mm.
refinancing of commercial real estate. And most of these places aren't even at 70 or 80% occupancy. What are your thoughts?
Oh, yeah. And I think that's it. People made a lot of deal out of it, but I don't think that the shoe's really going to fall until 2025. I don't think we're going to see much of it this year, but I think 2025 is going to be massive. And unless these building owners figure out something else to do, I know in New York, they're rejiggering a lot of buildings to make them to make them residential buildings and things like that. And the challenge that you have with that is it's a freaking war zone on the street. So who wants to live in the city at that
And
point?
they've been continually in their increasing taxes.
Yeah.
Next year, or maybe is it this year? I think they're trying to institute a wealth tax, which
Yeah.
California's been trying to do forever. It ain't going to happen. I don't care
Mm.
how liberal the states are. The wealth tax is a bad
Yeah.
idea. What are you going to do when your asset goes down the next year? You're going to
Yep.
get a tax credit?
Yeah.
Please.
Yeah. And
The other loopholes, the wealth tax is a bad idea.
yeah. And the thing is, they'll try and pull it off, but how do you value all that? How do you value the properties that people have and everything else? So are
And then
you
you're
going to
going to keep
require
appealing.
people?
Yeah, you're going to create more cost for the government to try and police that. It's not going to
Yes.
work.
Yeah, it's just stupid. Yeah, it's well, people will be honest about their wealth and they'll report it. I remember Florida used to have that idiotic law that was basically a wealth tax, and that was anything that was in non-governmental securities like savings and things like that. They used to tax you at the end of the year. And it was this idiotic thing. I remember when I worked for Fidelity that people would move money like the last day of the year, they would move a ton of money into government money market fund or like municipal money market funds
Yeah.
so they could avoid the idiotic wealth tax. It's all these stupid little ways that, oh yeah, we're going to make this is the way we're going to come up with our budget shortfall. How about this? How about stop spending a ton of money? That's a great way to do it.
I agree with you. Again, this was brought up a couple of years ago. I had a couple clients that were freaking out. I'm like, all it is a trial balloon.
Yep.
They're just in order for this to go through, too many people need to be leaning on one side of the boat to make it happen. It ain't going
Yep.
to happen.
No,
All right,
no, no.
let's move on to some tailwinds. So we can be positive. I'll let you start off.
Once again, I think we will probably see some rate cuts. I think the market is actually pushing rates down a little bit more. And they're doing the Fed's job in a little bit of a case, although rates are back up a little bit this week. I think rates dropping, that helps with a resurgence in real estate. Real estate's really come to a screeching halt. A little bit in the building industry and the new home industry, mainly because they're able to do a little bit from a finance perspective. They can do a little bit of juking and jiving from a finance perspective. But I think rates dropping, those people that want to move, that are looking at, I've got a 3% loan and I'm going to get an 8% new home loan, that are just not moving. Yeah, you see some rates drop, you're going to see some movement, and that's always good because when you see movement, new people coming into a community, it starts to help. It's an expansive effect because people move in, they need to buy new furniture, they need to go to Home Depot, blah, blah, blah. All of that. When people are just sticking in their houses, and most of them have done all their updates, the Home Depots, the Lowe's of the world really struggle. I think another tailwind is continued strong employment. We'll talk about that in a few minutes here. And then increased strength in the market breadth. We're starting to see the market widen out and not just 7 to 10 stocks that are really dominating everything. We've seen a little bit of a market breadth expansion towards the end of 2023. I predict that we'll see a little bit more of that, which means that's a more healthy way. If you looked at the market last year, besides about 20 to 25 stocks, everything else was pretty much either down or flat for the year. So it'll be interesting when we look back in the 5 to 10 years, for those people that didn't experience this year, you're going to look at 2023 and go, oh man, it was an amazing year in the markets. The reality is it really wasn't. It was a really screwed up year in the markets with a very small group of stocks leading the pack and making the indices look like they were up massively.
Yeah, I'm going to ride that last coattail of yours, and I wanted to bring it up. I thought it was interesting. I saw this stat the other day. Typically, and this has been a given over the last 100 plus years in the market, the top 10 stocks are responsible for a decent percentage of the overall market move. Last year, the top 10 stocks were responsible for 75% of the S&P 500 move. So in the prior 10 years, the most it had been, 2019 was 53%, 2020 was 59%. And of course, those top 10 stocks really moved up 75% last year. And you can see already a lot of that sell-off has been going on in the first 3 days of this calendar year.
Yeah.
So going on to mine real quick, I agree with you about the employment. As long as the consumer is spending, a lot of other things will stay in place, even if it's built on a house of cards, right? And the consumer spending, we're going to get it. Last year, they expected corporate earnings to be down 10 to 11% and ended up being up a few percentage points. Next year, they're looking for corporate earnings to be up 10 or 11% this year, 10 or 11%. So I believe that if we actually hit those numbers or exceed them, market's going to fly most of the year, not just post-presidential election. And I do believe there will be a couple of rate cuts, but not until the second half of the year. And if those rate cuts are only a quarter of a point each, that's not a major cog in the wheel to keep the economy going. If anything else, all that is just gently stepping on the accelerator for the economy. And then obviously some of our honorable mentions, the economy is just getting comfortable with high rates, and we're going to stay above 4.5% or 5%, and we just deal with it. Okay, existing homes will slow, but if people got to move, they got to move, right?
Yeah, that's the thing. And especially depends on the employment situation.
Yeah.
If employment's good, people may be having to move. I think there's other opportunities in today's world with remote, especially in the tech world. They can work remotely in a lot of cases. People are looking at different places to move around the country and everything else. So I think, yes, that initial shock, but people get used to it and you just build it into your budget.
Yeah, I agree. Low US dollar. If the dollar's been going down in the last 6 to 8 months, and if it continues to go down, it's only going to help exporting. People want to buy more of our goods. Our earnings expansion, so our earnings keep expanding, or every quarter, if companies end up guiding higher on their earnings instead of still remaining neutral or negative like they did most of last year, that's going to push the market up. And then, of course, our infamous always caveat, no geopolitical event.
Yeah.
If there's no geopolitical event and things simmer down a little bit, the temperature gets lowered on it, which I don't see how. Things have already escalated in the last week. But if there's no geopolitical event, market's going to levitate either at the current or higher levels.
Mhm. Well, and this is the last year of a presidential year. Now you've got a team that's been in place for a long time. Typically, these overseas wackadoodles that cause all kinds of havoc typically don't do much during that. They try and start to poke and prod going into a new administration. That's if Biden gets reelected, you already know what you're experiencing from that perspective. There's already a team in place. If you have a turnover and a changeover, there's new people in place. They're trying to get secretaries and all the different offices and everything else, or all the different heads of departments. And that's typically when you see a lot of that. Although we're going into this year with a lot of headwind from just craziness all over the world at this point.
I agree. So putting it all together for our business case for next year, why don't you talk about your numbers? I got ranges from my market outlook, but
Yeah.
You seem like you seem actually just positive in general between your base case and bull.
Yeah. Base case and bull. I think base case, I'm around 9%, 51.27 from current levels, or at least what they were yesterday. I don't know where they are today. Bullish case is up about 12% for the year, 52.68. I don't really see us getting super high this year. And then my bear case is down 8% for the year, 43.87. A relatively tight range from the high to the low for me. My take on this is I think we're going to see a lot of volatility this year. I would expect volatility to be up significantly, mainly because a lot of those headwinds, like a crazy political election this year. I just think there's a lot of stuff going on in the world. I think it's possible that we have decent earnings on companies this year. The year over year case, it was not a great year for earnings in 03. Year over year is probably going to look a little bit better if we have some good stuff. But I think we're probably going to be positive. I just don't think we're going to be off the charts positive this year.
No, I hear you. I have a much more detailed explanation in my market outlook, but I believe we're going to be higher. So I'm more leaning towards my bullish case and my base case, but
Yeah.
I'm not like a flag waving bull.
Yeah.
I think we're going to be higher because once the certainty of the presidential election is over, I think the market's going to fly. But between now and then, it ain't going to be a straight line to get there. I think our base case is a lot of the top 7 or 8 stocks. I don't think they're going to be a lot higher by the end of the year. I think we're going to be propped up by the rest of the market as far as them trying to do catch up, because most of them were flat to negative for 2023. And I just truly believe my bear case, if something does happen, people are looking for the exits. I just think we're going to go down a lot quicker. It's the escalator up and the elevator down. And I just think if we're going to go down and something's going to break or something major is going to happen, we're going down. We're going to go down that floor. We hit almost the 4,100 level at in late October of last year, and that was a strong floor. And something major has to happen in order to get through that. So if something happens, I think we're just going to crash right through that.
Yeah.
I hope it doesn't happen, but again, I just can't see us just meandering along here.
Absolutely.
All right. I know you want to go over a couple more items.
Yeah. Let me pull up here. We were talking about employment. So let me pull up a couple things. It was pretty much a quiet week this week on the economic outlook, but interesting this morning, actually yesterday and today. So jobless claims, the consensus was about 218. So we came in right around there. Interestingly enough, they revised down the previous month, or actually revised up a little bit. So, jobless claims hanging around where they are. So we're not seeing any major rise there. The ADP number, oops, that's the problem. Hang on one second here. Let me change this out. I just realized I put the same thing in twice. So give me 1 second here to add this in. But I think the interesting thing this morning was the ADP report, which came in Now, I'm not a huge fan of ADP because they've been strong or their stuff has not been as predictive, but 164,000 new payrolls blew out the range of 99 to 130, which once again, I think is like driving a truck through. Consensus was 115, and we came in at 164. So it's going to be interesting to see the jobs number tomorrow. This will be Friday of this week, and see what actually comes in as far as employment. That's a major part. It's one of my themes in there, that continued strong employment is a headwind or is a tailwind behind the economy.
Their number could be good because unemployment ticked down in November.
Yeah.
So I know this is December's numbers, but it may have ticked down. We'll have to see. Tomorrow, we're going to get the unemployment for December. So next week, we'll talk about that a little bit more detail.
Yeah, absolutely. The final thing I wanted to go over, we've been talking about student loans and everybody kicking in with student loans. Here's the deal. There is a massive student loan strike or student debt strike, that there's just a whole bunch of people that said, you know what? I don't want to pay. Yeah, screw you. I don't want to pay it. So 40% of borrowers, student loan borrowers, have not made a payment since the beginning of after the moratorium here in October, when things started back up. 40% of people decided not to do it. Now, is it all of them on strike? I don't think so. The administration has done an absolutely horrible job of communicating that, hey, it's on and you've got to pay. You had the president coming out and saying, oh, we're going to do stuff to get rid of student loan debt and all this. Yeah. Confused the heck out of a lot of people. But I think there is a large group of people who just said, screw you, I'm not going to do it. And I don't know what politician, what's the government going to do? What's the IRS going to do on all of this? Who's collecting on all of this? Because it's mostly federal student loan debt. Who's going to be the collector on all of this? What's going to go on? Are they going to have to hire collections?
They've gotten a bill. You get a bill, you pay it.
Yes.
I mean, they said 60% made a payment in October. So this kind of just goes in line what we're talking about as a possible headwind for this year.
Yeah.
If 40% isn't going to pay their student loan, guess what? The government's going to have to come after them.
Yeah.
They're going to have to make a decision.
Here's the reality of that 40%.
Yeah, pay the student loan or pay the credit card debt.
Yeah. But here's the reality of that 40%. It's 8.8 million people that are just saying, screw it, I'm not going to do it. It's insane. Once again, we have I think a generation. My guess is a lot of those are this current generation, Gen Z, Gen X, or Gen Z millennials.
Oh, yeah.
That are just like, I don't want to do it, so I'm just not going to do it. And all right, don't do it, but it's going to come back and bite you in the end. It's going to ruin your credit rating and everything else.
Obviously, they don't care.
That is precisely correct.
I think
they don't care, and then the politicians will pander to them and say, well, we'll figure out something, or we won't make it count against you for this first year or something like that. And
we've had 3 years to figure this out.
Yeah.
We've had 3
years of not having to pay.
Probably 1 to almost 2 years too long.
Yeah.
Sorry. Rates low and you got a job, you pay your bills.
That's exactly right. And you know what? If you can't live in the nicest place or the place you want to live, you live where you had to. And that's the way I did. I lived in an apartment. You've not lived a true life unless you have had an electrical spool, a wooden electrical spool as a dinner table. So
I hear you. We got to stop with the handouts, but that's a separate conversation. Until next week.
Absolutely. Folks, thank you for joining us today. I hope you learned a lot. Hopefully you'll hold our feet to the fire. We'll have to come back at the end of the year. We didn't do this last year because we weren't doing the show at that time. So we'll come back at the end of the year and see what our predictions were and see if we are even remotely close at this point.
I hear you. Looking forward to it.
Awesome. Thanks, folks. Make sure that you subscribe to the channel and make sure that you put that little notification button on that pops up so that you know when the shows come out. And we will see you guys back here the very next week.